Ken Morse. He's a professor at Duquesne University in Pennsylvania. Ken, thank you so much for joining us. Now, I know you have a book which you're actually launching in the UK this week, which basically, and I'm interested in the title because it says Oil Volatility and the Next Global Crisis. Are we going to see a lot more volatility from now on for the next 2 or 3 weeks? And what is going to, what is the IEA doing? Does it need to release more strategic reserves to try and, stabilize the market?
Well, I think, first off, we're already in the next volatility cycle. But these cycles are going to become more intense. They're going to be more severe. They're going to be more frequent. We will have some bubbles bursting further down the road. And
this is oil bubbles.
These are oil bubbles. And the problem with oil bubbles against other sorts of assets is that oil bubbles tend to recur more frequently. So this is going to be a ripple going through the market.
But again, these oil bubbles are produced why? Because China, we had these encouraging figures from China because they're cooling their economy. Inflation is under control, but we're not expecting a hard landing. So what are the causes of these bubbles in oil?
Well, my approach has been, after about 18 months of research, we have some intense difficulties within the trading of oil itself. We have traders out there who can no longer effectively peg a value for crude based on its market price. And the essential reason is they have no essential place with reliability to put their options.
So this is what, a transparency problem?
This is it's not simply a transparency problem, it's a built-in defect in the trading system itself. You see, we have to remember that oil has two functions. It is a commodity, and we've known that for some time, but it now is actually its own financial asset. And as its own financial asset, it tends to have a life of its own. We have some results that have taken place which will occur more frequently, which are entirely unexpected. If we take a look at April 29th through May 6th, 5 trading sessions, we lost 15% in the value of crude oil, well beyond everybody's option positions, right in the middle of an option cycle.